Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. It's Monday. It's June 26th. It's about 7:57 in the morning. The market's not going to gear up to open for another hour and 33 minutes, which gives us plenty of time to get into today's agenda, what we can expect this week, where the strength is, where the weakness is, earnings, Fed data, and all that other stuff, including support, resistance levels, and sectors to stay away from. Now, something big for you. I have opened up my VIP room for the public. It's Monday through Wednesday at noon Eastern time. The link is below this video. So if you guys are enjoying these videos, check out my VIP room. You're going to love it. Thursday, it's at 10 a.m. Eastern. Friday, it's at 11. But Monday through Wednesday, it's at noon. That's including today. The link is below this video, and you may also find it in the Roger Scott channel if you're watching this video there. And also, make sure to subscribe to our Telegram and post comments here. If you want to subscribe to our Telegram channel, go to rogerscott.com/Telegram. Make sure to like and subscribe to these videos, and let's get started. What are we waiting for? The market's going to open up in an hour and a half. So as you can see here, we're down about 21 points on the Nasdaq. The Dow is flat. I warned you that we were going to see some downside selling pressure, and we just had a downgrade on Google and Tesla today. And Google is one of the biggest stocks in the QQQ. So that's going to put some pressure. Tesla, QQQ, going to put a lot of pressure on the NASDAQ sector. We've got a lot of data. Not today, but we've got a lot of data this week. You got durable goods tomorrow. You got consumer confidence tomorrow. You got new home sales tomorrow. Then you got Mr. Jerome, a.k.a. Squirrely Powell, speaking on Wednesday. That's not going to be great for the market. You got international trades and goods and services. On Thursday, you've got the biggest report of the quarter. That's the GDP. We may have a slow Wednesday getting into it. You've got jobless claim. And on Friday, to top everything off, you've got personal income and consumer sentiment. Now, I've always proposed to have consumer sentiment next to consumer confidence before all this data comes out, but the Fed's not listening to me. Now, I wanted to show you all the earnings that are out this week. Officially, earnings season starts in about a week and a half. 2 weeks, but earnings are always there. Today you've got Carnival. Now, Carnival's been doing pretty well. People have been going on revenge trips. Cruise ships have been booked. Energy prices are not going up right now, and COVID is on the down low. So keep an eye on Carnival, and also keep an eye on other cruise ships that may not be reporting today, but may be relevant. Because if Carnival comes out with really good news and real positive data, it'll be good for all of the different cruise ships and cruise liners. Tomorrow, and it's the first time in 3 years that I'm actually recommending cruise ships, so it's an interesting period. Tomorrow you've got Walgreens reporting, and by the way, you could see all the earnings per share data. I'll share this with you if you go into my VIP room today, which is happening at noon, and the link to get there is below this video. That's right, either on YouTube or in the page you're watching it, or maybe above this video, I'm not sure. But you could see how they're looking right now. They're looking at up year over year, 12.5% on EPS, and revenue of 4.9%. I don't think they're going to beat it. Jefferies is coming out with earnings tomorrow. Then you've got General Mills on Wednesday. I think that's kind of interesting. You've got Micron on Wednesday. You got BlackBerry, but that's not here nor there. And here's the expectations. They're looking at negative $1.60 on Micron. Remember, Micron's got an issue with China trying to kick them out. National Beverages, and on Thursday you've got Nike. We got to start watching for consumer discretionary stocks, and with China being in the crapper, excuse my French, this may put a little weight pressure on Nike. They're looking at only 67 cents per share, which would put them negative 25% year over year. That's quite a lot. Then you've got on Thursday Rite Aid, you've got Acuity Brands, McCormick, Simple Foods, and Rite Aid, and on Friday you've got Constellation Brands. So consumer staples, consumer discretionary, it'll be very, very important. I warned you about a week and a half ago, and I posted a telegram. That's right, rogerscott.com/telegram, where you could subscribe, that we're seeing a little breakout here on treasuries. And today we're already up at 104.4, which is up here, so we're definitely breaking out. Now, I don't know it'll be sustainable, but there's not a lot of pressure on the Fed to make adjustments right now with their interest rates, and we kind of know they're going to slow down the rate. So I think we're going to see a little more upside from the bond market in the week ahead. Keep an eye on that. Very, very important. Now, Consumer discretionary, look at how it's moving. It's starting to move down. Momentum has broken. If you look at consumer discretionary right here, which we will look at right now, you will see very painfully that, and it's already opening down about 66 points, but you see this momentum level? I don't know if we can come up from that. RSI is already coming down, and again, consumer discretionary is on the way down, and look at the area we've just reached. Now look at it on a 5-year basis. What happens after we go up here? We usually come down all the way. Now look at industrial. Look at industrial stocks. And you could see right here how we're coming back in. You could see on how we're starting to fade on consumer discretionary after making a very, very strong resistance level, how we're fading down. And you could see the same thing on industrial, how we're coming back after the algos tricked us out. And you could see here on the industrial how momentum levels are declining. Here, let me go to 6 month. You could see here. And again, once we come up to this level, it doesn't happen a lot. If that's the case, remember, the Dow has a lot of industrial stocks, and that's going to put a lot of pressure on the Dow Jones, which would cause blue chip stocks to come down just as I've been expecting them to. This is the Dow, and this is industrial. This is the Dow, and this is industrial. Same thing. And as I mentioned, momentum levels are declining. So technology, look at momentum levels. We're already at 33rd percent on the 20-day moving average. Remember I told you they were going to cool off? And if you look at XLK, you'll see that things are coming off. I think that the rally in technologies is pretty much done. We've hit major swing highs, and now we're coming down. I don't think it's a pullback because there's no catalyst right now, and we don't have tech earnings for quite some time. Now, let's talk about the nitty-gritty and what we can expect this week from the market, and we'll kind of summarize everything for you and give you some positioning. So market participants are looking ahead to the release of the Fed's favorite inflation gauge while waiting a speech from Federal Reserve Mr. Powell. That's happening on Wednesday, and the favorite inflation gauge is GDP because that makes up 2/3 of the economy. Just kind of trying to put everything in perspective for you. On Friday, we broke lower. Tech-heavy Nasdaq snapping its 8-week winning streak. I warned you about that last couple of weeks, and the benchmark 500 breaking its 5-week rally. So really important. I think this is going to continue into this week. Economic data on Friday showed that manufacturing fell to a 6-month low, weaker than expectation, and services declined to 54.1 from 54.9, slightly surpassing expectations, not really much. Now here's where it gets interesting. San Francisco President Daly said Friday that 2 additional interest rate increases this year is very reasonable. Atlanta President Bostic said Friday that tackling high inflation was the primary focus, expressing optimism that this objective could be accomplished without hammering the labor market. Getting inflation down is job one. Inflation is too high. So now we have a 70% chance of a 0.25. It went as high as 77%, and I predicted this is going to fluctuate between 50 and 80%. Now we're moving down, but again, it just depends on how the data fluctuates. But I'll be keeping you updated of this. But that's what's pricing in right now. We had Russian mercenaries made a very short rebellion on Saturday. It wasn't very lived. I was getting really excited. I thought that was going to be the end of Putin, but not so. As I mentioned, there's a slew of data, economic data coming out, and on my favorite Fed, I'm being totally sarcastic, Mr. Jerome Powell is scheduled to deliver his speech on Wednesday. Whenever he speaks, the market usually goes down. Europe stocks are up just a hair. They're looking at the uprising in Russia to see if there's an elevated risk for downside pressure. They're also seeing that chemical and retail stocks lost ground. I'm looking at retail stocks this week with Nike reporting, with Constellation Brand reporting. Definitely want to see how consumer stocks do. And based on momentum levels, technology, consumer stocks, industrial stocks, they just aren't looking all that great. China is closed sharply lower as investor digested lower tourism rates. Sluggish economic recovery fell short of expectations, and from what I'm gathering, there's some potential for COVID breakout again in China. Here, tourism mobility data touring the 3-day Dragon Boat Festival pointed to fading post-COVID recovery momentum for in-person services. So I'm hearing 2 different things. I'm hearing it's picking up, and then I'm hearing it's cooling off. But we got to keep an eye on COVID because there's just damn too many people in China. Japan, index lower, third straight session. They're just looking and waiting to see what the U.S. economy does. As I mentioned, we may see some pressure on Tesla today. They were downgraded. Whenever Goldman Sachs downgrades a big stock like Tesla, it's no good. Alphabet was downgraded as well. Keep your eye on technology stocks. And as I mentioned, we have earnings on CCL. And Moderna was upgraded. I just missed that one. I don't know how I missed that one, but Moderna was upgraded, so healthcare stocks may see some upside. I've been very bullish on healthcare stocks, actually. Carnival may get a little rise, not much in terms of earnings. As I mentioned earlier, the Dow has now fallen back into its channel range, as you could see right here. See that? Breakout, algos, and then it comes right back down. Infotech momentum levels are now at 30th percentile. Industrial stocks are back in its range. I think we're going to see more choppiness and more downside pressure with possible consumer staples moving higher, possibly moving higher, and healthcare possibly moving higher. I'm not overly bullish this week. Want to see what happens with the bond breakout, and I'll keep you posted, but there's a lot of data we have to digest, and with downgrades in Tesla and Google, not feeling very frisky about the Nasdaq 100. Maybe it'll come up, maybe not, but I think that the momentum we've saw is behind us, and I think we need to go back to the base, which is not all the way to 320. So we've got a long downside to go. It'll be interesting how they react during earnings. Now, before I let you go, Celeste Lindman, she's brilliant, right? She's got like an 80% win rate on her weekly turnaround strategy. She's hosting a special event today at 1 p.m. where she'll detail the trend that's led her to 9 straight winning trades. That's what I'm talking about. This includes winners like 69% on FT&T, 31% on CARR, 27% on Dollar Tree, and trades only held for a couple of days. Don't you guys want to get in on it? Celeste is on a major hot streak right now, and like she often says, the trend is your friend. Find out how she does it today at 1 p.m. Eastern Time. Save your seat by clicking the link below and find out how she got these 9 winners in a row. I got to get in on this. I got to figure out what she's doing. Follow the link below. Check it out. Remember something. You can subscribe to my Telegram channel below this video or above this video, depending on where you find it. Go to the Wealth Press YouTube channel. You can subscribe to Telegram there. You can subscribe to my VIP room that's happening at noon today, and it's free. You don't want to miss that out. I'll see you guys there. If you have any questions, send me an email, support@marketgeeks.com. Have a great week. Remember, industrial stocks, technology stocks, consumer stocks, a lot of Fed data, GDP. It's going to be a crazy week. Bye, guys. I'll see you soon. And downgrades on Google and Apple. Bye.